Good time to get in Porinju Veliyath, MD and Portfolio Manager at Equity Intelligence, to try and figure out what is it that Equity Intelligence is doing with its funds, what is the investing strategy right now. Porinju, good morning. Thanks so much for joining in. Good having you as always. What's the stance right now, Porinju? If at all you would be getting more money, because the markets are a bit shaken up right now, investors would be holding back investments right now. But if at all you'd be getting money right now, would you be keen to deploy it into the markets, or would you be biding your time right now?
At this point of time, if I get funds under PMS, I will finish it in 5 minutes.
Wow.
I'll buy stocks with that.
That was a very quick 5-second answer, which means you are very confident that markets, this is a time to buy. So what gives you the confidence that this is the right time to buy when, when there are big global problems, China, crude, US Fed, BOJ. So does it make sense to be a cowboy when the terrain is not that smooth?
Yeah, I couldn't hear the question. Well, anyway, I think you're talking about the global problems, the global slowdown, and my confidence. I feel being in India, being an Indian investor, we are in a different position. There is no doubt about that. This is a fundamental standpoint for Indian equity investors. But when the things are bad, when there is a sell-off happening, FI is selling, and the stock prices go down and continue to be depressed, some prices try to recover, again it goes down. So this take away the confidence of an average investor. I can understand that. Traders have, especially the bullish traders, see 99% people are bullish traders among the traders. So they have a very bad time. Some of them might have wiped out all the capital. So it's a very sad scene. I understand. But genuine investors who do value investing in Indian markets, I feel there is nothing to worry. Because of the fundamental reason, on arithmetics, I am clearly bullish on Indian equities at these levels, just on arithmetics, not because of any other things or sentiment, crude price or China's going down. Forget all those things. Now investors have kind of interest in the information. They have got access to the kind of information which is, it's amazing. People are looking for the next meeting of Bank of Japan or Bank of England. They are very, very hourly. They are monitoring yuan and the Shanghai index, the Dow, and how the European markets perform, how the gold prices move, and the crude and aluminum or copper prices. Investors are so much keen on knowing so much information. And I heard last week everybody in India and all the stock market people, they know the birth date of Raghuram Rajan, our RBI governor. It's well and good. But do we need so much information to invest in India? I don't think so. We have to see information is there everywhere. Now, where investors are failing, to coordinate them and come to a rational conclusion of value investing in Indian markets. See, it's very tough to make a call on the general Nifty Sensex or to talk about the general market. What I have been always talking, the last
just
1 year.
Porinju, I don't know if you track this space actively because there's a broad macro call on the steel space, but beaten down stocks, a lot of actions being taken. Would you be enthused?
Yes, Neeraj. I think we are getting into a time, people have to look at some beaten down companies where you think these companies and these industries are going to survive with a reasonable balance sheet kind of thing. A lot of them, I think, it's coming to extreme values at this point of time. There can be some negative still uncertainties. Now, we talked about China setting up 800 million tons steel capacity. They not only in steel, in everything they have built capacities beyond global, I think, beyond the population in this planet can consume. The kind of ghost cities they are creating, they are famous for that. Maybe they might have got some clue, some other planets, there is life in other planets. If they get a clue, they will start, producing for them already. So that's a way they have built up huge capacities beyond the requirement of human beings today. So they will pay for that. Unfortunately, India also will be affected in the short term in some of those aspects. But ultimately, it will be a balancing act in the economies going forward. And this all will get settled. Now we have the maximum of negative news, negative events, negatives to talk about. So that is very unfortunate. That doesn't mean, the world is changing so much fast and so much in quantity. So we will have a balancing thing. And markets will be sober. These negatives will go off. And, basically the world is producing more goods and services than required. So that is how the recession starts or the slowdown starts. So we have been in a slowdown, not just this month or last month. India and the world is in a slowdown the last maybe year or two. It has been already, there were symptoms.
Sure, sure.
And that will get adjusted. Now going forward, you will see a lot of positive triggers happening.
Sure, no.
Positive.
Porinju, I take on board that point, and I think it's a very valid point as well, and that probably ties in with the current problem at hand. Now, the bigger problem, Porinju, and just before we call it curtains on this discussion, the bigger problem right now is for people who've gotten into stocks at slightly higher levels, good quality names, but all of these have come off as well. It's happened across the board. It's happened across mutual funds. It happens across equity schemes as well. What do people do with some of these really amazing stories that we've discussed in the past as well? There has been an FCEL, there has been a TCI, things that we discussed in the big picture as well on ET Now. What do people do out there in those stories? What are you doing if you had more money there?
Yeah, we are just holding on to these stocks now. Neeraj, it's a very valid question. Now, let's take the example of FCEL. FCEL was just 10 rupees, maybe nearly 1 year ago, or even 7-8 months ago. And we have been recommending this stock. I have been very strongly recommending this stock. It went to 26. And now it's around 21, 22. It has given a good correction. But somebody who's convinced with these fundamentals of this company going forward and how they are going to have a big market share in the food FMCG sector, in the retailing and in the procuring of products from the farmers, warehousing it, and including logistics. It's a fully integrated FMCG food company, starting with procuring products from the farmers across the country and selling it at their own retail outlets and other distribution networks. So these kind of businesses, I think India has a long way to go if they are cost competitive and they have got quality and brands and well managed. I think this is one of those companies from the Biyani Group, and I am still very confident on this company. It's one of our largest holding. It was only 5-6 rupees 2 years ago. It was 10 rupees 1 year ago. Today it is 21 rupees. And I see that kind of a further growth going forward next 1, 2, 3 years. Maybe much more. Even we can dream for next 5-10 years. So India has such kind of quality businesses. One thing you are very correct, Neeraj. People cannot just do casual buying in this kind of an economic environment when there is destructive technologies and competition in place. People have to be very selective. We used to have the last 2-3 decades where even casual investors used to make money by investing. But it may be not so going forward. One has to be extremely choosy which companies will survive, which businesses will survive, and how these companies are managed dynamically or not. How is the balance sheet, or they have too much debt that company can die out. No, those are the things one should look at from the macro level. You can forget this 1 quarter or next quarter results or the numbers. With a longer term view, with a big picture view, what once we discussed in ET Now, the big picture view, where we have to look at an economy in India from $2 trillion to going to $5 trillion all the way. So shall I tell you one more thing? My big picture the way of looking at the equities today, I am very confident India will add another $1 trillion to our market cap in the next 3, 4, maximum 5 years time. So that's a huge opportunity for stock picking in our markets.